Hello, my name is Mayanka. I am accounts and a finance trainer from Uplatz. Now, in this class, we will discuss a new topic. We will discuss the income of other person included in the assessee's total income. Is that in this class we will discuss clubbing provision. Provision of clubbing means when the income of other person clubbed in the income of another person or in the income of assessee. Is that for the example, there is any person, he transfer his income to other person. For the example, there is a person, Mr. Ram, he transferred his income in the name of Sita or to Sita without transferring other assets, without transfer assets means the amount of interest is a transfer in the name of Sita, but the FD is not transfer in the name of Sita. Is that the income which are relating to such assets, the income relating to such asset is a transfer in the name of Sita, but the asset is not transferred in the name of Sita. So in this situation, the amount of such income, the amount of such income for the example, amount of income is 50,000, then it will be taxable and included in the total income of Sita. It will be included in the total income of Sita. It will be included in the total income of Ram. It will be included in the total income of Ram, not in the income of Sita, because only the transfer of income, is not sufficient. If income is transferred but the assets is not transferred, if the income is transferred but the assets is not transferred, then the income will be taxable in the hands of such a transferor. Means the person who will transfer such a income. As per the example, Ram transferred the income to Sita, but the assets is not transferred by Ram. So in this situation, the income 50,000 will be taxable, or it will be included in the income of Ram. It will not be included in the income of Sita. It will not be included in the income of Sita. So in this class, or in this provision, in this topic, we will discuss the provision of clubbing. In this class, we will discuss section 60 and section 61. We will discuss section 60 and 61. So now we will start our discussion on section 60 and 61. Clubbing of income. What is the meaning and what is the introduction of clubbing of income? Means what is the meaning of clubbing of income? What is the meaning of clubbing of income, and what is the concept of clubbing? What is the concept of clubbing? Normally, as per the provision of Income Tax Act, the assessee make the payment of tax on his income. Just like there is an assessee, Mohan, and he has following income. Just like he has salary income. 6 lakh rupees, and he has bank interest on his savings, 2,500 rupees, and he has other income. For the example, 7,500. These income are in the name of Mohan. These incomes are related to the Mohan, and Mr. Mohan, he is required to pay tax on such a total amount. He is required to pay tax on 6 lakhs 10,000 rupees, on 6 lakh 10,000 rupees. But there are some circumstances and there are certain conditions when the income of another person means the income of another person is added in the income of the assessee, and such assessee is required to pay tax on the income of another person. Is that there are some cases where the assessee has to pay tax in the respect of income of another person, income of another person. The provision for the same are contained in section 61, 62, 65. Means the clubbing provision are defined in section 61 to section 65 of the Income Tax Act. These provisions has been enacted to counteract the tendency of the part of taxpayer to dispose of their property or transfer their income in such a way that their tax liability can be avoided and reduced. Means the provision of the clubbing is made for the purpose to avoid or to restrict the to avoid mean to restrict the avoidance of tax and the reduction of tax. Is that for the example there is an assessee, Mr. Ra, and he has total income. He has total income for the example 5,50,000. 5,50,000, which is more than 5 lakh, because if the income is up to 5 lakh rupees, then the assessee will be eligible to take the rebate under section 87A. But it is more than 5 lakh rupees, he is not eligible to take a rebate under section 57A. So 87A. Then such total amount means after providing basic exemption, his amount 3 lakh rupees will be taxable. So for the purpose of this, Ram transfer 50,000 rupees, 50,000 rupees income to his friend or to his brother, 50,000 rupees. His brother's total income. His brother's total income, for the example, only 2,50,000, and he received 50,000. Then 3 lakh, which is not, where and there is no need to make the payment of tax. So in this situation, when he will transfer 50,000 rupees, he will transfer such a 50,000 rupees. Then his income become 5 lakh. The income of Mr. Ram become 5 lakh rupees, and he will take 87A, and the tax will be zero. The tax will be zero. And the tax of Moon will also be zero because his income is less than 5 lakh rupees. His income will also be zero. So to avoid this type of practices, the provision of the clubbing provision are introduced on the basis of this. Such 50,000 rupees of income which is transferred by Ram to Mr. Mohan without transferring the assets, then such income will be taxable in the hands of Ram. It will be taxable in the hands of Ram only. Such 50,000 rupees will be taxable in the hands of Ram only. It will not be taxable in the hands of his brother. It will be taxable only in the hands of Ram. So these provision has been enacted to counteract the tendency on the part of taxpayer to dispose of their property, means they dispose of or they transfer their income so that they can avoid the tax, they can reduce the tax. So the main purpose of introduction of such concept is to restrict the practices of tax avoidance and tax reduction. Income of other person includable in the assessee's total income. Now we will discuss those provisions and those conditions when the income of another person, when the income of the another person will be included in the total income of assessee, when it will be included in the total income of assessee. So number one is transfer of income without the transfer of assets. There is the transfer of income. There is the transfer of any income without the transferring of assets. Section 60. Section 60, when there is any assessee, transfer the income in the name of any other person, but without transferring the asset, but without the transferring the assets. For the example, Mr. Ram, he has a house property in his name, and the rent from house property is 2,50,000 rupees per annum. Per annum. Now, Mr. Ram transfers such rent in the name of his wife. Name of his wife means according to him such 2,50,000 will be taxable in the name of his wife. But the house property is in the name of Ram only. Means the income in the name of his wife, but the property is in the name of his own name. So in this situation, such 2,50,000 will be included in the income of total income of Ram only. Then such 2,50,000 rupees will be added. It will be included only in the income of Ram only, because there is a transfer of income without a transfer of assets. Is that if any person transfer any income from any assets, if there is any income which is earned from any assets, and such income is transferred by the person, and such income from such assets is transferred by the person to the any other person without transferring the asset, then such income to be included in the total income of transfer. Then such income will be included in the total income of the transfer. Is that such a 2,50,000 rupees will be included only in the hands of Ram. It will not be included, or it will not be taxable in the hands of his wife, because there is only a transfer of assets. There is only a transfer of income. There is no transfer of assets. If Mr. Ram, he has a transfer rent as well as a house property to his wife, is that if the house property is a transfer to his wife, then the rent from such a house property will be taxable in the hands of his wife only, because there is the transfer of house property, there is a transfer of assets. So the income from such asset will also be taxable. It will also be taxable in the hands of his wife. If it is immaterial whether the transfer is revocable or irrevocable, and whether it has been made before the commencement of this act and after its commencement. It is immaterial means such provision will be immaterial if the transfer is irrevocable. If the transfer is irrevocable or irrevocable, and whether it is made before the commencement of this act, and after its commencement. Means if such a transfer of the income is made before the commencement of this act or after the commencement of this act, or such a transfer is revocable or irrevocable, then such provision will not be applicable. Then such provision will not be applicable. Is that if there is a transfer of any income and it is irrevocable, or it is before the such a act, then such income will be taxable in the hands of his wife. In the hands of his wife. Now we will discuss it by the way of example. Mr. A confers the right to receive rent in the respect of house property to his wife. Means Mr. A, he confers the right to receive the rent, means now the rent will receive his wife, and the income of such rent will be considered the income of his wife. Mr. A, without transferring the house, means the house is in the name of Mr. A. So in this case, the rent which is received by Mrs. A will be clubbed in the total income of Mr. A. Means the same example, Mr. Ram, he has a house property, and the rent from house property 2,50,000. He transfer the right to receive the amount of rent to his wife without transferring the assets. So in this situation, such 2,50,000 rupees will be included, or it will be taxable in the hands of Mr. Ram, not in the hands of his wife. The same example is there. The income means the rent will be taxable in the hands of A only, because there is a transfer of only income, not there is a transfer of assets. If Mr. A transfer the house property to his wife, and then the income earned from such house property, then such income will be taxable in the hands of his wife. It will be taxable in the hands of his wife. Now we will discuss section 61. Income arising from revocable transfer. When there is any income which is arise from the revocable transfer of assets, then what will be the provision of clubbing? If there is any income which is arise from the revocable transfer, is that all the income which is arising from, if there is any income or all the income which is arising the from or by the way of revocable transfer of asset, then all these income are included in the income of transfer. If there is any income which is arise, there is an income which is arise by the virtue of revocable transfer, of any asset, then all these income will be included in the total income of transfer. Is that what is the meaning of revocable transfer? Transfer is deemed to be revocable. That transfer is deemed to be revocable if, number one, it contains any provision of transfer, it contains any provision of retransfer, directly or indirectly, of the whole or any part of income or assets of the transfer, and or it gives in any way of the transferor a right to resume power, directly or indirectly, over the whole and any part of the income of the assets. Is that when there is any transfer, and the transfer contain the concept of retransfer, means it will be retransferred directly or indirectly, either whole or the part of the income or part of the assets of the transferee, then it will be considered as revocable transfer. Or when there is any transfer of any assets and there is a right of reassume power, directly or indirectly, over the assets, over whole of the asset or part of the assets or income, then it will be considered as revocable transfer. So in this situation, any of the income which is earned by the virtue of a revocable transfer, then such income will also be taxable in the hands of transfer. It will be taxable, or it will be included in the total income of transfer, total income of transfer. But in the respect of such provision, there are some exceptions where clubbing provision are not attracted, even in the case of revocable transfer. Is that, for the example, there is a assessee Mohan. There is a assessee Mohan, and he transfer a assets. He transfer and assets in in a revocable in a revocable transfer. Means there is the transfer of a revocable. Means there is a transfer of a assets and a revocable. And from such assets, there is the income. There is the income 25,000 rupees. There is the income of rupees 25,000. Then such 25,000 rupees shall be included in the total income of such a transfer. Then such 25,000 rupees will be taxable, or it will be included in the hands of transferor, because this is the revocable. This is the revocable transfer. This is the revocable transfer. Then such amount 25,000 will be taxable, or it will be included in the income of transferor. It will be included in the income of transferor, not in the hands of transferor. Now we will discuss some provision. Now we will discuss some exception where the provision of the clubbing will not be applicable in the case of revocable transfer. Means there is a revocable transfer, but the provision of club will not be applicable. But the provision of the clubbing will not be applicable. Section 61 shall not be applied. Section 61 shall not be applied when there is the revocable transfer. When there is a revocable transfer. But in these two situations, the provision of the clubbing will not be applicable. Number 1. Transfer not revocable during the lifetime of the beneficiary or the transferee. Means there is the transfer. There is a transfer by the virtue of revocable. But such a transfer is not revocable during the lifetime of the assessee, during the lifetime of the beneficiary or the transfer. If there is a transfer of any assets which is not revocable during the lifetime of the assessee, during the lifetime of the transferee, then the income from the such a transfer asset is not included in the total income of transfer, provided the transferor derives no direct or indirect benefit from such income. Means he is not deriving any other benefit from such income. He is not driving, or he is not collecting any other benefit from such income. Is that for the example? Mr. Sohan, he has transferred and assets to his sister, and from such assets, the income is 50,000 rupees. From such assets, the amount of income is 50,000. Now, such asset is transferred under the revocable transfer. Means such asset is transferred under the revocable transfer, but there is a condition that such transfer, or it will not be such a transfer, or it will not be revoked. It will not be revoked within the life of his sister. Means if there is a transfer of the assets which is not revocable during the lifetime of the transferee, during the lifetime of the transferee, during the lifetime of the transferee. Means such a revocation is not revoked up to the life of the transferee. Then if this condition is there, then such 50,000 sorry 5 lakh rupees will not be taxable in the hands of in the hands of it will not be taxable in the hands of someone. If such a such a revocable transfer is not revoked up to the life of such a transferee or beneficiary, and from such 5 lakhs such sohan from such 5 lakh the sohan does not incurring any other benefit, means he is not earning any other benefit from such income. If there is a transfer of any assets by the virtue of irrevocable transfer, and such irrevocable transfer will not be revoked up to the life of beneficiary, then such income will not be clubbed in the hands of transfer. It will not be clubbed in the hands of transfer. If the transferor receive direct or indirect benefit, if there is any transferor, he earned directly or indirectly any benefit from such income, then such income will be clubbed in the total income of such transfer. Then such income will be taxable in the hands of such a transfer, whether the transfer is made by the virtue of revocable transfer, and such a revocable transfer will not be revoked up to the life of assessee, up to the life of transferee. But when the transferor earn any other additional or any other directly or indirectly benefit from such income, then such income will be taxable in the hands of such transfer. Means if from such 5 lakh rupees Sohan earn Sohan earn other benefits. Sohan earn other benefits. Then such 5 lakh rupees will be added in the income of in the income of Sohan. It will be added in the income of Sohan if he is earning any other benefit. If he is earning any other benefit from such income. If the transferor receive direct or indirect benefit from such income, then such income is to be included. Then such income is to be included in his total income. Then such income to be included in his total income, even though the transfer may not be revocable during the lifetime of the asset, during the lifetime of transfer, during the lifetime of transfer. Number two exception is transfer made before April 1, 1961. When the transfer which is made before 1st April 1961 and not revocable for the period exceeding 6 months. When the transfer is taken place before 1st April 1961 and it is not revocable for the period of exceeding six years. If there is any income which is arising from the transfer of any assets and the asset is transferred before 1st April 61 and which is not revocable for the period of exceeding 6 years, then such income will not be included in the total income of the transfer. Such income will not be included in the total income of the transfer, provided that the transferor does not earn or does not receive, does not derive any benefit from such income, does not derive any other benefit from such income. So, in both the above cases, as and when the power to revoke the transfer arise, then the income which is arising by the virtue of such transfer will be included in the total income of transferor. Is that if such a revocation, if such a revocation is revoked before the life of his sister, if Mr. Sohan told, now I want to revoke it, I want to revoke such a transfer, then the income will be taxable. Then all these income will be taxable in the hands of transfer. It will be taxable in the hands of transfer. So this is the two exceptions. So these are the two exceptions where the when any asset which is transferred, when there is an asset transfer by the virtue of revocation, or irrevocation, then the assets, then the income from such assets will not be included in the total income of transfer. It will not be included in the total income of transfer. So on the basis of such a discussion, we have discussed section 60 and section 61. On the basis of such a discussion, we have understand two sections, section 60 and section 61. Section 60 and section 61. Provision of clubbing. Provision of clubbing. When the income will be clubbed, when the income of the any other person will be clubbed in the total income of assessee. And number two, we have also discussed some exception. When there is a transfer of any assets by the virtue of revocable, but the provision of clubbing will not be applied. So on the basis of such a discussion, we have understand section 2, section 60 and section 61. Other section means the clubbing provision defined in section 60 to 65. Other provision we will discuss in our next class. Kindly consider all the classes of such topics so that you can properly understand each and every concept of such a topic. Thank you so much for watching this video. Okay, bye-bye and have a nice day.